Hey everyone, welcome back to Chat ETF. Today we're diving deep into the world of cybersecurity and a popular ETF targeting this booming industry, the CIBR. We'll crack the code on this ETF, analyzing its risks, rewards, and some surprising alternatives. Stay tuned, and let's get chatting about cybersecurity ETFs. Question 1. What is the expense ratio of CIBR? And how does it compare to other cybersecurity ETFs and actively managed cybersecurity funds? The expense ratio of the First Trust Nasdaq Cybersecurity ETF, CIBR, is 0.59% as of February 1, 2024, U.S. News Money, FT Portfolios. This expense ratio represents the annual fee a CIBR investor pays to cover the fund's operational costs, including management fees, administration expenses, and marketing costs. Here's how CIBR's expense ratio compares to other investment options in the cybersecurity space. Other cybersecurity ETFs. Expense ratios for other cybersecurity ETFs can vary. Some popular examples include lower expense ratio. ETFs like the Global X Cybersecurity ETF, BUG, have expense ratios around 0.47%, ETFs database. Similar expense ratio. Some competitors like the SPDR SP Cybersecurity ETF, SAN, might have expense ratios close to 0.59%. Actively managed cybersecurity funds. Actively managed funds typically have higher expense ratios than passively managed ETFs, like CIBR. This is because actively managed funds employ portfolio managers who research and select investments, which incurs additional costs. Expense ratios for actively managed cybersecurity funds can range from 1% to 2% or even higher. In summary, CIBR's expense ratio of 0.59% falls within the range for passively managed cybersecurity ETFs. Some competitors offer slightly lower expense ratios, while actively managed funds typically have significantly higher fees. Question 2. Does CIBR distribute dividends, and if so, what is the typical distribution yield? Yes, CIBR does distribute dividends. Here's a detailed explanation of CIBR's dividend distribution. Distributions. CIBR distributes a portion of its holdings income to shareholders periodically. This income can come from dividends paid by the companies within the cybersecurity index that CIBR tracks. Distribution frequency. CIBR typically distributes dividends quarterly. This means shareholders can expect to receive dividend payments 4 times a year. Dividend yield. The dividend yield is a metric that represents the annualized dividend payment per share as a percentage of the ETF's share price. CIBR's dividend yield can fluctuate depending on the dividends paid by the underlying companies and the ETF's share price. However, based on current information, as of April 16, 2024, you'll find various sources reporting dividend yields within a range of 0.17% to 0.47% for CIBR, Nasdaq, Stock Analysis. Important notes. Past dividend yields don't guarantee future payouts. The actual dividend amount and yield can vary depending on the performance of the underlying holdings and the ETF's management decisions. Dividend payments are not guaranteed. The fund can choose to retain earnings for reinvestment or other purposes. Here's why dividend distribution might be relevant for CIBR investors. Income generation. For investors seeking regular income, CIBR's quarterly dividend distributions can be a source of cash flow. Tax implications. Dividends may be subject to different tax treatment compared to capital gains, profits from selling the ETF shares. Consult a tax advisor for specifics. Should you invest in CIBR for its dividends? While CIBR's dividend distribution can be a benefit, it shouldn't be the sole reason to invest. Here are some other factors to consider. Overall investment goals. Align your investment strategy with your financial goals, such as retirement planning or wealth accumulation. Total return potential. Consider both the dividend yield and the potential for share price appreciation when evaluating CIBR's total return prospects. Alternatives. Explore other cybersecurity ETFs or actively managed funds to compare their dividend yields, expense ratios, and investment strategies. By understanding CIBR's dividend distribution and its role within your overall investment strategy, you can make a more informed decision about whether CIBR is a suitable investment for you. Question 3. How volatile is CIBR compared to the broader market and other cybersecurity ETFs? Here's a breakdown of CIBR's volatility compared to the broader market and other cybersecurity ETFs. Volatility measurement. We can measure volatility using various metrics, with the most common one being standard deviation. Standard deviation shows how much an investment's returns deviate from its average return over a specific period. A higher standard deviation indicates greater volatility. Comparing volatility. Broader market. The broader market, often represented by indexes like the S&P 500, U.S. stock market, or the MSCI World Index, global stocks, generally exhibits moderate volatility. Historically, these indexes have a standard deviation around 15% to 20%. Cybersecurity ETFs. Cybersecurity is a growing sector, but it's also a niche area compared to the entire stock market. This niche focus can lead to higher volatility for cybersecurity ETFs compared to the broader market. Here's a breakdown to consider. CIBR versus other cybersecurity ETFs. By comparing the standard deviation of CIBR with other cybersecurity ETFs, you can assess its relative volatility within the cybersecurity sector. Some competitors might have lower or higher volatility depending on their specific holdings and index composition. Actively managed versus passively managed. Actively managed cybersecurity funds may employ strategies that aim for higher returns, but this can also lead to increased volatility compared to passively managed ETFs like CIBR. Factors affecting CIBR's volatility. Underlying holdings. The volatility of the companies within the cybersecurity index that CIBR tracks significantly impacts its overall volatility. Since cybersecurity is a dynamic sector with potential for rapid growth, but also exposure to cyber threats and regulation, these factors can contribute to the ETF's price fluctuations. Market conditions. Broader market movements can also affect CIBR's volatility. During periods of economic downturn or market corrections, cybersecurity stocks might be more susceptible to price swings due to their growth-oriented nature. Understanding volatility and CIBR. Higher volatility doesn't necessarily equate to bad investment. For investors with a long-term horizon and a risk tolerance for short-term price fluctuations, cybersecurity ETFs like CIBR can offer the potential for high growth. However, if you're risk-averse and seeking more stable investments, CIBR or other cybersecurity ETFs might not be the most suitable option. Consider broader market ETFs or bond funds with lower historical volatility. Question 4. How liquid is CIBR, and can I easily buy and sell shares at fair prices? CIBR is generally considered a liquid ETF, but there are nuances to consider when evaluating its liquidity and your ability to buy and sell shares at fair prices. Here's a breakdown. Liquidity metrics. Trading volume. CIBR has a decent daily trading volume, typically in millions of shares. This indicates active trading in the ETF, making it easier to buy and sell shares throughout the trading day. You can find daily trading volume data on most financial websites. Bid-ask spread. The bid-ask spread represents the difference between the highest price a buyer is willing to pay, bid, and the lowest price a seller is willing to accept, ask, for an ETF share. A tighter bid-ask spread generally indicates higher liquidity, as it suggests minimal price difference between buying and selling. You can view the current bid-ask spread for CIBR on most brokerage platforms. Factors affecting liquidity. Market conditions. During volatile market periods or times of lower overall trading activity, the bid-ask spread for CIBR might widen, potentially impacting the price you receive when selling or the cost of buying shares. Order size. If you're looking to buy or sell a very large number of CIBR shares at once, you might encounter wider bid-ask spreads or even temporary difficulties finding a matching buyer or seller. It's advisable to consult with your broker about executing large orders to minimize potential impact. Strategies for buying and selling CIBR at fair prices. Limit orders. Instead of using market orders that execute at the current market price, consider using limit orders. Limit orders allow you to specify the maximum price you're willing to pay for shares, by order, or the minimum price you're willing to accept, sell order. This gives you more control over the execution price, especially during volatile periods. Partial orders. If you're dealing with a large order, consider breaking it down into smaller partial orders executed throughout the day. This strategy can help you achieve a more favorable average price by taking advantage of market fluctuations. Order routing. Some brokers offer order routing services that can potentially connect you with better bid-ask spreads by searching for hidden liquidity across different exchanges. Overall, CIBR's daily trading volume suggests good liquidity. However, factors like market conditions and order size can still influence the bid-ask spread and potentially affect the price you receive when buying or selling shares. By understanding these factors and employing strategies like limit orders and potentially order routing, you can increase your chances of buying and selling CIBR at fair prices. Question 5. How concentrated are CIBR's holdings in terms of individual companies or subsectors within cybersecurity? The First Trust Nasdaq Cybersecurity ETF, CIBR, offers diversified exposure to the cybersecurity sector by tracking the Nasdaq Cybersecurity Index. However, it's essential to understand the level of concentration within this diversification to assess potential risks and benefits. CIBR's Index and Diversification. CIBR tracks a market cap-weighted index. This means companies with larger market capitalizations, stock market value, have a more significant weighting within the ETF. While this provides exposure to leading cybersecurity companies, it can also lead to concentration in a few large players. Concentration analysis. Look for resources that analyze CIBR's holdings. Here's how to assess concentration. Number of holdings. CIBR typically holds dozens of companies, providing some level of diversification. However, the exact number can vary depending on the underlying index composition. Top holdings weight. Analyze the weight of the top 5 or 10 holdings in CIBR. A higher weight concentrated in a few companies suggests greater concentration. Ideally, you'd like to see a balanced distribution among holdings, avoiding an overwhelming influence by a single company. Subsector concentration. The cybersecurity industry encompasses various subsectors like cloud security, endpoint security, and identity and access management, IAM. While the Nasdaq Cybersecurity Index might cover these subsectors, CIBR's holdings might be skewed towards specific areas. Limited resources might not provide a detailed subsector breakdown, but some financial websites or research reports might offer insights into this aspect of concentration. Why concentration matters. Concentration risk. If a significant portion of CIBR's holdings is tied to a few companies or a specific subsector, the ETF's performance can be heavily influenced by the performance of those companies or that subsector. This can magnify both positive and negative returns. Diversification benefit: CIBR offers some diversification compared to investing in individual cybersecurity companies. However, the level of diversification depends on the concentration within the holdings.